Hello and welcome to a new video on the HKCM Global channel. My name is Philip. Today I'm going to be looking at China, more specific the HSI, the Hang Seng Index, one of China's stock market indices. China hasn't seen that much of impulsive bullish action over the last couple of years. It's been running behind the other large indices around the world, especially the US stock markets, but also many of the European stock markets who have all rallied to new all-time highs, one after the other. But since the corona lows, China has not really come out of the closet yet, and is still quite some time and some action behind in its performance compared to, for example, the S&P 500 or the Nasdaq, etc., etc. First of all, let's take a look at the overall expectation on the Hang Seng and the overall structure. I think it becomes quite clear what I've been just talking about, that the Hang Seng is lacking new highs, and it has been for quite some time. So the last all-time high we have seen in the Hang Seng dates back to the year 2018, but from our overall perspective, this high was probably only a corrective rise, and we have continued the downward action, corrective action, ever since. Basically, the last years when the S&P and the others made new highs weekly, monthly, on a weekly and monthly basis, even after all the corrections we've seen, 2020 drop, the 2022 drop we've seen, those were all recovered, those were all followed by new all-time highs. The Hang Seng was not able to follow the other indices, and is even having a hard time recovering the highs that we made back in 2023. So just recently we've seen some more action. The Chinese stock market seems to be gaining more traction, and there seems to be more of a general interest in the market, which is of course necessary to build the base and to build a momentum in the market. It's been neglected by most investors for quite some time. We've been calling a bottom for most of 24 and even 23. We were expecting the market at some point to find its bottom and start a new up leg and become bullish overall. We are also invested in the individual stocks of the Hang Seng, and also those have started showing some signs of a clear impulsive upward pattern in the last weeks and months. But if we dig a little deeper into the chart, there is still some risk here that all we have seen here so far has just been corrective action, and the market could also drop significantly and even drop to new lows, drop below the 14,000 point mark again. But this is something, which is not going to be happening on an imminent basis, but it's something that still has to be watched out overall, just because the market is so far from its all-time highs and has not been able to perform as other indices have. If we assume from today's levels just to reach the all-time high, we're still missing around 45% of upward potential, so this is significant. And I would also say that compared to other indices, China is undervalued. We all know fundamentals are one thing, but the market action and the sentiment are the other thing. And so far, the sentiment here has just not been able to fuel this move. But I think this could be recovered rather quickly, especially if the US indices and European indices start a longer corrective phase. China could be the profiteur of those developments, as it has been in the past. So China is usually somewhat of a lagging market compared to others, and starts to form new highs when others have already topped out and are maybe just rising in a corrective fashion then before it itself will find a new high. So this is something we have to watch out for closely, that this rise we're seeing currently could have just been a corrective move. So we would at least have to clear the area around 25,000 points to diminish that risk. And if we look at the more imminent scenarios, we are also expecting the market not to just march through now, but it's also this 25,254 point level that we are watching for. Unless we clear that, we still have to expect the Hang Seng to come back significantly. Right now, we could even drop to areas around 17,900, 16,400 points before we would continue the upward trend, which would also match my expectation on other indices as well, to be honest. But there's two other options here on the chart, which are not displayed here right now, but which would basically have the same outcome. There would be more corrective action to follow soon here in the Hang Seng as well, which would either be that there is going to be another wave 1 being established. So we are not forming the B wave right now, but we could be forming another wave 1, which would then be corrected by wave 2. We would, in this scenario, there would be no new lows below this low over here, which is marked with the alternative 2. And the other option is that within my primary scenario at the moment, that we would not reach new lows, or we would not reach the target zone I've displayed here, but just bottom out a little bit above. So if we assume that the high is already in for the moment, this could be one of the outcomes, of the possible outcomes. We could just be reaching the 100% extension here around 19,000 points, which would mean no new low, but which would still complete wave 2, and we could then continue the uptrend. Yeah. So overall speaking, the Hang Seng, there is currently a definite risk for a corrective move happening to the downside soon. Yeah, we still have some ways to go. We could still reach the top here around 25,254. That is absolutely manageable for the Hang Seng index at the moment, but we have to be careful and we have to be ready for a corrective scenario to unfold quite sometime soon. Also, if we take a look at the indicators on the Hang Seng, they definitely support the option that we can still have a little bit more to go, but we are starting to see clear divergences as well here in the chart, and we are seeing that if we're starting here out on the daily chart, we are starting to lose momentum. MACD is signaling going for a cross to the downside. RSI is starting to go down a little bit. We haven't seen any signals on my long-short indicators, but we're also seeing here, if you're looking at the Williams %R indicator, that most of the stocks are basically on highs and on overbought territories as well. And if we zoom out a little more, we can still see that the market is clearly in overbought territory. Not as crazy maybe as the US indices have been. So as I just said, there is still some room to the upside to go, but we have to be watching out for a correction to unfold. And then it will depend on how deep this correction will happen here. Now, monthly trend, we are coming from really, really, really low levels here, not just in the MACD, but also in the RSI. So we could have already formed the long-term bottom, which is also currently our primary expectation, that the market overall is not going for new lows and the uptrend will continue. But we can also see here that we have moved up significantly in the RSI without moving that much in the price action, to be honest. We've burned a lot of fuel, let's put it this way, for not that much of action in the chart here, which is also something I'm closely watching, as this is also a warning sign to me. But we are not yet in overbought territory or anything on the monthly, so there are still ways to go. And we have to see now how this current situation will unfold, how the current scenario will develop here. And if we're seeing this move to the downside here, I can only say this is going to be a very, very healthy move to set up more upside action. And it could mean that the Hang Seng is then getting its breakout signal that we've been long time waiting for, and which would be compared to the US indices, for example, which would then be outperforming those for a while, because there I'm expecting the markets to take more and more, a little longer and more complex corrective action in the near future. If you're interested in that, also watch my video on the Nasdaq. I've uploaded that last week. So that is something we have to be careful about here. Yeah, so in summary, Hang Seng, in the long-term perspective, a breakout is definitely possible. New all-time highs will be reachable at some point. But on the imminent scenarios, we have to watch out for what is going to be happening now. I'm definitely expecting a larger consolidation to happen soon, as shown on the charts. It will offer a nice buy-in opportunity here for Chinese stocks in general, not just the index, but also on Chinese stocks in general, because on many of those we are also expecting rather significant pullbacks after the recent rises we have seen, and those will also pose a large buying opportunity here. But I'm not seeing the market break out now without going back, at least as shown in the charts here. Yeah, thank you for watching. I hope you enjoyed the video. Please comment, subscribe on the channel. It's very welcome. It's very supportive for us. And stay tuned for more to come. Thank you.